right, what is up YouTube? It's been a while. So in this video, I'm going to explain to you how I passed one of my funded challenges in just one trade, one day after buying the account with FXIFY. So quite special moment to me. I was actually lucky to still get in the trade because I was a bit late. I saw my alert going off, but I couldn't immediately take the position. So I'm a bit lucky. I'll explain later why I was lucky to still get in. Very nice position that we took. The group had a lot of questions and on socials how I took the position. So that is why I'm creating this video trade breakdown of the position that I took. Please be aware that I trade with a bit more risk. So I take 2% per position. I'm scaling back up the account since I had a little bit of a setback, losing one funded account myself, and then I lost two funded accounts with the funded trader and skill funded trader because they just ceased operations. So had a little bit of setback and I'm scaling back up the funded account. So that's why I'm using 2% of risk. So that's quite important to understand. Please only do so if you have a track record, if you know what kind of results you produce. Otherwise, it's kind of risky. And if you are trading only one funded account, I wouldn't suggest using this kind of risk profile. So a lot of people wanted to know, so I'll break down how I took the position. Please be aware that a lot of preparation went into this trade. This isn't just a lucky guess, taking a 2% risk and just booming or bust. This is strategy some people used. They'll just reverse trade, take it on one challenge, take it on the other account. No, this was a very strong bias, very clear trade that I took because a lot of people told me you're taking a lot of risk trading this style, but to me it wasn't quite a high risk trade. But I'll explain that when we arrive at TradingView. So I hope you enjoyed the video. I'm sorry for not uploading that long. I have been away on a vacation and I took some time off trading. Had to journal a bit, think about where I'm going. I stopped coaching as well, just focusing on my own trading, scaling back up the capital. So that's the reason that I didn't have that much time to make a new video, but there was a lot of requests for this video. So of course I'm going to break it down. It's going to be a longer video, so I'm not going to waste too much time anymore right now. I hope you enjoyed. If you do so, please lock in a like, follow, subscribe, whatever you want to do. Share this video with somebody because I'll give you a lot of details. I'll go into depth why I took this position on EU long. So I hope you enjoy, and I'll see you in just a couple of seconds in TradingView. So arriving at the TradingView, let me explain to you how I executed my position on EU. What were the things that I was looking at? Why did I take such a risky? Because I had a lot of comments in my Discord from some of my students on social media as well, like you're crazy. It's a very high risk trade, but I believe truly that trading high risk comes from not knowing or not defining your risk in the market. That to me is a high risk trade. If you know what you're doing and you have a clear bias in the market, which can be seen as negative as well, but if you know at a certain point that you have some indications that you can take a position to the upside, to me, if you then define your risk correctly, it's a well-informed play and it doesn't really look, it isn't that risky to me. So to just blatantly say to me, well, Jordi, why did you take this position? It's quite risky. Well, I'll explain to you why it wasn't that risky for me and what I was looking at and why it seemed like a very straightforward trade for me to take. You have to know, you have to understand that I trade a lot of silver bullets due to swings. So these are ICT concepts. Very simple. We'll just look at session liquidity. We'll look at daily highs, daily low liquidity. And especially we'll look at the DXY, the Euro index. So let me start with that because that's actually where the trade got formed. So if you want to trade EU, of course, it's quite important that you know what DXY is doing. Honestly, if you want to trade Forex at all, it is quite important to understand what the DXY is doing, because if the DXY is bullish, we'll have a risk on scenario and the other indexes will most likely be bearish. When the DXY is bearish, you'll have a risk off scenario where you'll see other currencies most likely be more bullish. So understanding what the DXY is doing, of course, you have the strong correlation. If you have the DXY and you would mirror it with EU, you of course have the very strong correlation. So let me put that on the chart as well. If you didn't notice, it's, or let me actually show it to you like this. It's quite easy to see. So we have EU on the 4 hour, for example, here at the bottom, and let me put a DXY on the 4 hour, and you can see that we have almost identical movements in the chart. So it's quite important to understand if you're trading the DXY. Basically, wait, let me make it a bit more clearer, and then you'll see that they look very similar. If I flip this one, it's gonna look even more identical. So I think this is the easiest way to explain. Let me put some things on the charts, like in the one at the top, and you'll see that it likes the same price action. It's almost moving the same because when the DXY is bullish, Euro usually does the opposite. So that's why we have a very, very strong correlation in those charts. So that's point one that you have to understand. So if you didn't notice, it's something quite fun to go and backtest. So if you want to trade EU, it's quite important that you understand why you are taking that position on EU. Wait, let me go back to the normal view while you're taking that position on EU. And it usually starts for me at the DXY. So moving on with the DXY, you'll have to, I always create a higher time frame bias, and internally what price is doing, I try to see, preferably I'd like to take a position aligned with my higher time frame, but sometimes it's very clear that you can still expect a higher correction to take something out internally in price. Speaking of liquidity, some imbalances need to be filled in to move to our long-term target. So for example, right now we're seeing price, let's say this is our target quite easily. Let me put a sniper on there. Pretty fun little exercise. So let's say we have that's not what I meant to do, but it's, can you see it? Is it clear? So this is where we have, let's say, for example, a target, this point in the chart. So very simple. We want to, of course, trade to the downside, and that's something we did. If we are trading over here, we have the strongest play to the downside. If we want to trade to the downside from here, you could, but it's more risky. So you want to see more internally, want to wait for the exact execution. We already have a lot of confirmation, and now we can just wait for internal price action to just give us confirmation for our target. Here we are actually playing the external play, or well, you could have, if you go to the daily time frame, you could have set the same. You already have the higher time frame, and this is an internal play on the 4 hour. So it all aligns perfectly. So this is our target, and we wanted to play to the downside. Of course, let me play the week starting from this point, Wednesday, or we could start from. Well, this is the start of the week. We had this push to the upside, and we were waiting for a short. So let's put the price over here. So quite important. I was looking for a short position. You could have longed, but I'm not sure if there were any long opportunities over here. It's not the most perfect, as I said. Some people love to do that, but for me, I just like to wait. When we have a clear bias here, we have an expectation that the DXY is moving to the downside. Well, let me delete some. I can leave it there. It doesn't really matter. We already had a clear supply zone where we had some manipulation. So a lot of sellers got taken out here. We had the first move to the upside. We have a clear target because we are moving bearish. So we have this low. If we truly want to reverse, we have some early buyers. So we have a higher time frame bias where we are bullish. So if we truly want to see a move to the upside, chances are it could happen from here because we are reacting to something. But chances, if we look at the lower time frame, are stronger that we would move even lower and then move to the upside. So that is my very simple higher time frame bias. And of course, I'll check on the lower time frames if everything is aligned. I don't need the full move to the downside. So let's say if I'm taking a position on a bearish dollar over here, it doesn't need to make this move, because if it makes a move even like this, I'll already have a 3 to 5 R. So for me, I'll look internally for this move, but it's nice to see that we are trading aligned with a higher time frame bias. So moving on to the 1 hour, let's have a brief look at what is happening here. So this is the first point. And if you've been trading smart money for a while, or I don't like the name smart money, but if you're trading price action, liquidity, concepts like that, change of characters, you'll know if you've backtested it and traded a while, you know that if we change here and if you have the change of character, definitely on dollar pairs, it is not always what it seems. So I'd like to be a bit more patient. For the people who trade Wyckoff, it's always nice to see a first high and then get a reaction and got it swept out again. So this is Wyckoff. You'll have ST, UTAT, SOB. What is the? I don't know all the terms, but if you want to see Wyckoff, I don't teach or trade Wyckoff, but you'll see at a reversal, you'll most of the time see these plays happening. A first high, sign of weakness, we get over it again, and sometimes even next time. So reversals take time in the market. It's just quite easy to understand. Price does sometimes, when there's heavy news events, just wicks to high interesting levels, POIs, and they will react. But most of the times when there's not high impact news, you'll see price play. It's going to play. It's going to manipulate. It's going to take out some sellers. It's going to show you signs of weakness. It's going to take out some plays again. Of course, you cannot keep doing that, and you'll need to understand the concepts. So looking at this price, it's quite early for me to trade bearish. So looking at this, we're not changing direction. We're taking out these highs. So we have this small accumulation over here. We have this internal liquidity wick over here. So we're already seeing some signs of weaknesses in the chart. To me, it's quite interesting to see that we were accumulating here. Some sellers were trying to short, but they still get taken out. Let's see if we already get a move. Moving on. To me, this is not bearish yet because we're building up. There's a lot of buyers that can still get taken out. And you see the dot over here is going to be taking out right now. And they get taken out. So for me, we are still quite bullish. It means that a lot of sellers, this price action over here is telling me that a lot of sellers are coming in the market, but they're still getting trapped and we still make the continuation bullish. So seeing this internal play, it gives me a strong indication that we still get to take out this level. So let's see what happens. We remain bullish. I'm not sure if we still take something out here. It could be we get a wick here and we move back to the upside. Okay, it doesn't happen. We move straight to the upside. We have a manipulation. We move to the upside. Okay, for me, we're getting higher into our POI. So if we had to, whatever, how you want to draw your, if you want to include wicks, whatever, but here is some kind of supply area. I'm not so precise anymore on making these blocks because it doesn't really matter. You want to make a block like this, it doesn't matter. You know that there's supply there. I'll just put the block on how we reacted. And this was usually the last bullish candle. I'll also care about the body closes. And this is usually where supply is happening. But you'll see what price is doing at this point, so it doesn't really matter how precise you. It's kind of a beginner's thing where you're like, oh, do I draw my zone like this, like this? Don't waste too much time on it because it's more important what price action you're getting at that zone. Moving up to the upside, we have a quite nice push. So for me, I know we want to see something bullish happen. Now, this was happening around 11 o'clock. So for me, it's not quite interesting. So we're getting some people short in the market. For me, it's a bit too early. And at this point, I was looking at the lower time frames. I think it was the 5-minute chart. Yes, this one. Perfect. Okay. So this one was sketchy. We had this little manipulation over here. So as I explained earlier, let me find a picture for you on Google. I'm not sure if you can still follow Google with me, but let me find you a quick picture and it's going to be very nice. You're going to love this. I actually need a white guard. This one could be easy. This is a very good picture, I think. Okay, so let's move it here. Can I remove the background a bit? Okay, so I have a fun little exercise. So let's do it like this. We have the PSY, which is point of supply, if I'm not mistaken. Then we have buying climax, automatic response, sign of, I don't know all the names, sign of weakness. We come back, we have an uptrust, we come back, and we make this test, which should be named UTAT, which is a uptrust after distribution. And then we get a push to the downside, we get last point of supply, we get a sign of weakness again, and we have the last point of supply. I don't know if this is fully correct, but this is what Wyckoff is. So let's remove this and let's see. It's basically the same happening here. So seeing this was such a strong indication for me. So putting this, can I make these lines a bit bigger? Perfect. So now can I make them a bit more flashy? Flashy. I hope this works. Not sure. Shit, it's not what I'm looking for. But okay. Let me put them back to black. So what is happening here? I'll put it right here. You'll have this first high. This is your, and let me indicate them like this. PSI, PSI. You have your first push to the upside, You have your second push to the upside, which is here. And then in the meantime, we had these weaknesses. Then we push lower. Okay, we push even lower. So for me, this is an indication. Okay, first thing to understand when you see this price action, we want to go lower. Clear indication. If you trade price action, you can see that we have a change of character happening right here. Quite important to understand. If I want to take a short, I could. It would be here. This is actually the point that broke it, but you gotta pay. You can already see the line over here. For me, I know we can still have that last push to the upside, because I know at these reversals we can have these Wyckoffs happening, and there's going to be a lot of play. So for me, I'd still want to see another rejection. So if you would have traded here already, and I know some people who have traded here already, which is perfectly fine, you would have put your stop loss like this, or you would have looked to the left on a higher time frame, and you would have put a higher stop loss. You could check here for price action, doesn't matter. So you could have done something like this on EU long. But what happened? I saw the time. So this was around 1 o'clock. So I was waiting for New York to open. What is happening? We get that last little push. Now, of course, if you're trading Wyckoff, if you're looking at this, what is your starting point? Because you'll probably have some price action in advance. You can have this as well. So where do you start to count? Because it could you could have been counting from here already. So let me remove this. You could have been counting from here as well. We get a first push. But the key difference is that we start to range, and that this is the first play where we turn bearish. Here, if you start counting here, we haven't turned bearish. So you always take your last point from where we moved bearish. It's a quite little easy trick to understand where you have to start counting your highs and lows. So what is happening here? We get that last uptrust after distribution. So for me, I was looking if I could take a position right here, but I think we still had some little wick right here. We saw price moving, and this is the exact point. I didn't see this one, or did I wait a little bit longer? Let me, not sure which one, but this one would have been perfect for me. This one, perfect. And then you see that we just trade a little bit higher above it, and now you know the play is going to happen. So this is the play that happened, of course, but you can see it building up. I entered perfectly, but I was a bit lucky. Well, lucky, I would have been in the first one, but I entered on this one. So it's just, I was actually late. So I'm lucky to still be in the trade. Because I saw this one and I was like, okay, now I'm very sure that we're moving to the downside. So this is your sign of weakness, changing in direction. You wait for that last manipulation from the Wyckoff, and this is where I did a market execution on EU. So this is quite important to understand this full picture on the DXY before we move to EU. We also had the Euro index, so quite important. No, not going to put it on. Quite important play. We had the same exact vision on EU. I'm not going to waste too much time here, but you can see that we had the same thing. We wanted to go short, but here we had bullish signs. So we saw this rejection. To me, this was just wonderful, wonderful. We had accumulation, early buyers. People want to go short, and then we just pick up all these orders right here. And this, to me, you can just see where the manipulation happens. These are great plays in the market right here. See, great play. And these are the plays that you actually want to shoot in the market. What we are doing right here. This could be a great play. This could be the next bullish push next week. This is a free signal. Of course, you'll have to do some higher time frame work, but this was still a very, very great play. But just looking at these points of manipulation aligned with your bias can be a very great way to take some executions in the markets. Of course, you'll need some more alignment, and you'll have to, but most likely these points are very, very clear, and you'll understand why you'll trade. This is just a continuation to the upside to take something out very high. And I think we still have a lot of room to the upside, but of course, we're not going to do a full analysis today. Moving on, combining it together on EU. Actually, all your work is done. Everything has been done. There is nothing technically you have to do at EU because you already know what is happening. So looking at price action, we are bullish clearly on the 4 hour. I'm not going to waste too much time, but we still have some targets. We have some liquidity over here, over here, over here. So we have 3 targets that we actually could see in the market that still play out. So let me put these levels here and align them. So we have 3 targets that we could target. This, of course, was the first target that could be interesting. This is more long term. So these are important targets to me. And now I can move to the 1 hour. I can still see that markets were playing. They wanted to move to the upside. We had a strong signal right here. If you would have taken a position right here, it would have been smart to exit your position right here because we have a sweep to the downside again. So moving to the upside, still having this. So what is the difference here? We don't have that sign of weakness yet. We're not yet showing that we want to reverse. So we know that we can go lower. So now we move lower. We already received some stuff on the XY, and we still see this zone at the left right here. So this was very important. This was the main confluence that I used. Of course, we are bullish. I saw this build up over here. So a lot of buyers were here. So we can expect some orders to kick in the market. Same position as I took on Australian dollar CAD, I think, a couple of months ago. I think I made a video about that one as well. But it's kind of the same. So aligning everything perfectly and waiting for that manipulation. Of course, I went on the lower time frames. Let's see what happens here. We know that we want to move to the upside. We still have this sweep. We just wanted to see this sweep. So, okay, we see this, but we want to see the price is strong. So we see price reacting, price moves strong to the upside. We change direction. If you're a smart money trader, we call this change of character, but it doesn't matter. You can just put a line. So we're getting our first sign that we want to move to the upside. The same thing that we had on the DXY. So moving on to the 5-minute chart. The same thing we had here is happening on EU. So we have a perfect confluence. We have a perfect alignment with the DXY. And then, yeah, you can already see what happened. This was important. So here's where the position came in. It's even lower. It's not there yet, somewhere around here. So what is happening? A lot of smart money people are trading here because they see a change of character. Oh, yes, I have to enter right here. So a lot of people were entering right here. You could have, which is perfectly fine because on the DXY it was clear, but you would have needed to do something like this. And to me, I like to wait for the manipulation, and this was just before New York, so I waited for New York to open. We also can see that we have a clear liquidity pool at the bottom right here. Just wait for that sweep to happen. Look what happens. We sweep, and I think at this point, I entered after this candle, so I had the perfect timing, but I was late because actually I should have been in the position. If you look at the DXY, I should have been in it already, but I had the perfect execution after that manipulation, and I entered right there. I took it with 2% risk. That's why I passed the challenge, of course. And I didn't know we would skyrocket that hard. And yeah, then there was some news later at 1 hour later or 30 minutes later was some news that skyrocketed, but it wasn't a heavy impact news event. So, okay, nice that it was that heavy after all, but I wasn't scared of that. And then I closed the position. I was looking at this high. So this was my target. So right here, but then I passed the challenge at 5R and I closed the challenge as well on my on the main accounts that I took the position on because it was a 5R trade and I didn't want to risk 5R just to get this little grab, but it still happened. So let me move it to the upside. This was the play and it's very clean how you can see the same thing at that level what happened. So it was a quite fast TP. It's the first time that I passed a funded account that quickly, which is insane. But I could have kept it longer. I didn't need to. And then you can see we didn't tap that level yet, so we could have kept the position. And then after all, you see what happens when we tap that level. So quite strong reaction. And of course, we can now see some bearish momentum again, and maybe we can take a play again to the upside next week. Who knows? But after you've seen this, you know you'll have to see some more bullish price action again, and perhaps you'd like to take a short position right now next week. So moving the price, you could perhaps take some shorts, wait for this to be taken out, and take a correction if you want to. But of course, you want to trade with the higher time frame. So looking at the higher time frame, taking a short here is not what I prefer to do. If it looks very clean, if it's aligned with the DXY, which it probably is, but you'll be trading this correction, which is possible because if you look at the 1 hour strong correlation, it depends. You could play it, why not? But for me, there's a lot of room to the upside, so could be a play next week if you're an active day trader. So this is my play on you. I hope you liked it. It was, I think, once in a lifetime trade for me to pass a funnel challenge with one position. Of course, it was a 2% risker, but it's crazy how the trade played out. I'm lucky that I still got in. That's what I'd like to say, because I was a bit late to the party. I was looking at longing this position. So quite important to understand, I had this in my watch list. I've been looking at the DXY euro for a couple of days. I wanted to look for a long since we had this. So this was the first time I was looking long, and I kept checking every day. And this was when everything came together. I could have taken a loss right here, but I didn't trade right here because it wasn't clear for me. I didn't take the short here. I should have actually taken the short here, but of course, if after the events have happened, you can say everything what you want. You can say, I could have taken a short, I could have taken a long. The matter of the fact is, I took a long over here, and that's everything that counts. So I hope you enjoyed this breakdown. This is a very long and very in detail breakdown. Basically, this is for my students because they asked about it, but I hope you on the YouTube enjoy this as well. And then I'll see you in the next video. I'm very sorry that I've been inactive again, but I had some great time on holidays, and then I hope you enjoy this breakdown. See you in the next video. Don't forget to like, subscribe, put on your notifications, and keep along with the updates that I'll be posting the coming weeks. So have a great trading week and enjoy your weekend. Bye bye.